picture of power concept. This is what I want you to pull from this lesson. This is what you've got to do for the rest of the week. What's your picture? Is it the picture of power to the bear side? Is it the picture of power to the bull side? Here's a picture of power to the bear side. Is it the straight, narrow state? Are you getting no conflict with the open? All right. Are you getting no conflict in the bear? Are you getting no conflict in the bull? Same thing here. And so are you getting in either of these pictures, the neutral, it doesn't matter up or down, but the bull matters. You want up, and the bear you want down in the most ideal scenario. And then you want, are you getting no conflict with the color? So you're getting no conflict with the position of the open, and are you getting no conflict with the color that flows from the open? This is going to place you in good stead right off the open. And then I want you to understand that after strong leg ones, there's a good possibility of a leg two, and you've got two scenarios that typically play out to get your leg two. The bounce up, boom, and you've got the drift sideways, boom. And this is largely how we grab the leg twos after you've had a nice, strong leg one. Guys, you take these two things and you go to work with them this week. You make this your focus every day for a week. Make it yours. Identify those pictures. What picture am I dealing with? Identify those opens. Do I have no conflict with the open position? Identify do I have no conflict with the color that flows from the open? Identify that. And then identify, do I have a strong leg one that materialized? And then practice and work with what type of leg two is developing. Is it the bounce leg two, or is it the sideways leg two? Guys, there's very few people in the world approaching it this way. This is what's going to make you elite. This is what's going to separate you from everyone. This is what's going to make you or have you turning their deposits into your profits. There are two pictures of power, right, with these two moving averages. So when you've got the 200 above you and the 20 period beneath you, this is important, like that. That is the picture of power to the downside. But when you've got the reverse, when you've got the 200 beneath you and the 20 period moving average drifting higher above it, that is the bull picture of power. So you've got this bear picture of power, and you've got this bull picture of power. It's extraordinarily important to understand what picture you're dealing with. Now, there's a third picture, and that third picture comes in two forms. Really one form that doesn't really matter, but I'll cover that in just a second here. So you've got the neutral, or the very narrow state, where you don't have a slope of any kind, really. And so you have these three main pictures, right? And there are subdivisions of these pictures, by the way, which is not the topic that we will cover today. But each one of these pictures has different stages, all right? And so, you know, here might be the beginning, and here might be the sort of the mature part of a narrow state stage. Here might be the beginning of a bear picture of power, but here might be a mature wide state. So there are different stages of these, but it's important to understand the three main pictures, right? Your bear picture of power, your bull picture of power, and your very tight, narrow state picture. Now, in a narrow state, your 20 can be under or above. It really doesn't matter. What matters is the closeness and the flatness of practically both of the moving averages. And these are the main pictures that we play off of, guys. Now, remember, there are different stages of them, but these are the main pictures we play off of. And if you can't frame the market based on these three pictures, then you're going to have a hard time, because everything starts from these three pictures. Everything we do in the market is playing off of one of these three pictures. All right, Derek is saying, I took this PayPal. Awesome. All right. And so what picture do we have with PayPal? We've got this one, the bear picture. Now, in this bear picture, which you know before the market opens, you should know that PayPal has a bear position before the market opens. You see, this picture before the market opens, this picture looks like that. You see? So you know it's a bear picture. And then, boom, what happens is that PayPal opens under the bear picture. That should be your key. This is a potential short. Awesome, Kate. Katrin says that I took the PayPal too. Awesome. So stock opens, you've got a bear picture, and the stock opens in a bear. You've got a bear picture and the stock opens down in a bear position. So if you think about this, if you've got a bear picture and the stock opens bullish, you have conflict, right? Think about that. If you open here, you've got conflict. Or you open there, you've got conflict, because your stock is a bull position, but a bear picture. All right. But check this out. As we know, our stock opens. Let's get the open there. This concept is very important here. Our stock opens in a bear position inside of a bear picture. There's zero conflict. Bear picture, bear position. All right. How many people in the world know that you should identify what picture you're dealing with, identify whether you have conflict or no conflict in the open? Very few people in the world know this. You know this now. So we've got a bear picture and a bear position, no conflict. But then what do we get with the first bar? We get bear color. You understand? Bear color. But check this out. So we've got bear picture. All right. We've got a bear picture. We've got a bear. Shoot, I should do this. A bear picture. We've got a bear position. And we've got a bear color. Wow. Bear picture, bear position at the open, bear color. You got all three. All systems are go. Everything's a match. All right. Everything's a match. And there should be no surprise why something like this flows. It's beautiful. All right. Now, Ben is saying here, Oliver, I saw PayPal on the open, but the bottom wick made me hesitate because it was not a clean red bar. What are you supposed to do with the wicks, Ben? You should know this. If you're not playing a tail bar, what can you do with the wick? You can do this. And it's gone. See? And it's gone. Enter. Stop. That's right. Drop. Okay. What's after the drop? What are you looking after the drop? Bounce of some sort. It's fine as long as the bounce doesn't break past the halfway point of the drop. Boom. 1, 2, 3. That's all we're after, guys. 1, 2, 3. All right. Do that again. Drop. Where's the halfway mark? Bounce doesn't break the halfway mark, and boom. 1, 2, and 3. And we're done. All right. Beautiful. All right. Now, with that being put in place for us, I do want to cover my trade, and then we're done for this session. All right. I want to cover Tesla. Now, I wasn't, to be honest with you guys, I told you I had a little bit of technical difficulty this morning, so I couldn't grab the open right at the open with Tesla because I would have played this differently, but I missed the first 4 minutes of trading. 4 to 6 minutes of trading. But I did manage to still grab a decent gain out of the play. But I do want to cover how it should be played without this technical difficulty, how it should be played by you, how I would have played it if I were present 5 minutes before the open, seeing this. So let's grab our picture. Tony says I did the same with Tesla. Awesome. Let's grab this picture. I love when you guys do the same as me. 20, 200. I mean, the 20 and the 200. We've got the bear picture of power. Then we've got the open. The bear. So remember, we've got the bear picture. We've got the bear position on the open. And what we're waiting for is the bear color, right? And we get the bear color, boom, right there. Now, why am I saying right there? Because for most people, once you get the first bar, you can use the low as your reference point. Now, the really aggressive ones can use the body as their reference point. But there's nothing wrong with using the low of the first bar as your reference point as well. The first bar doesn't end red. Now, you could have gotten into the first bar before it stopped being as red. But the real flow happens in the second bar. Boom. Protection. All right. Let's say you enter 2 lots. Protect yourself above the event. Protect yourself above the event, or you're going to protect yourself with your maximum loss per trade. In this case, it's kind of like your choice. But this stock should not be turning around, wiping this out. It should not. It's too perfect. We're all systems go. Remember, bear picture, bear position, bear color. So you should not be turning back around from here. All right. So stop here, anywhere, stop there is fine. You're going in, boom. 2 lots. And here's how I would have played the first part of the move, which I didn't get. Now, I would have gone in as soon as I saw some red. All right, let's say I did 2 lots. My 2 lots are different size than yours. Stop. I'm going to take some profits on this drop. Okay? I am going to position myself for a bounce. Now, remember what I said. On the first leg, I want the bounce because I'm looking for leg 2. So I want this bounce after leg 1, but I don't ideally want it to break past the 50% mark. So here's my first bounce. Here's my first drop. More or less 50%. Doesn't have to be perfect. It's a general guideline here. And I'm looking for the bounce. So remember, I'm in, stop, profit, profit maybe, looking for a bounce and looking for leg 2. Now, I am going to play or re-enter on the bounce on the color change. Where does the color change happen? Where does Tesla break a green bar? On the bounce. But I don't get a bounce. Now, I come into the market late. I come in here. I'm like, shoot, I missed Tesla. So now I want the bounce. This is such a beautiful leg 1 that I want the bounce. But I'm not getting the bounce. So what I often do, guys, what I often do is I just go in a little bit and wait for the bounce. But just in case I don't get it, I get the drop. All right. But what I want you to do is I want you can try for the bounce and go for, let me do this in this color. You can wait, you can try. You want the bounce, and then you want the color change on the bounce. Boom. Why am I doing that the wrong color? All right, you want the bounce, and then you want the color change. You want red to take over again. Boom, there's the color change. And you want to play the color change on the bounce to get leg 2. But you're going to get, guys, you're going to get you're going to get the color change here. And sometimes you're going to get the color change here. Boom. Do you see the difference? Sometimes that green's going to drift up and then break. But sometimes the green is going to drift sideways and then break. Tell me you understand this. Are you picking it up? Boom, color change on the drift up break, the first pullback break, or the drift sideways break. Boom. Tell me you understand this before I move on here. All right. So these are the two versions of the color change that you get, the proper ones. Okay? So I ask you, which one is Tesla? Is it version 1 or is it version 2? Candlestick Conrad. Awesome. Glad you're picking up what I'm laying down there. It's version 2. Here we go. Nice. Don't really get a bounce toward the 50% mark, right? You kind of get this drift. Here's your green. It's your green. But when does red break it? Right there. Boom. So you got this version. And boom. There's your leg 2. Guys, this is powerful. Now, what I want to bring your attention to is the fact that I miss leg 1. You're going to find yourself throughout life as a trader missing leg 1, but still being able to grab leg 2, knowing this concept. If you've got a beautiful leg 1, why let leg 2 go? There are times you might just be there, but miss it because you were focused somewhere else. But you catch the leg 1 once it's complete, but you still have the ability to play leg 2. There are some traders, listen to me carefully, there are some traders who actually specialize on leg 2 because they feel like they don't get leg 1s very well. Their statistics have proven to them they're not a great leg 1 trader, but they're a great leg 2 trader. Some traders wait for the leg 1 to finish. Their whole beginning of the morning or beginning of the open is just monitoring their list to find good leg 1s so that they can now go into their leg 2 strategies. There are some good traders that are just leg 2 traders. I prefer that you be a total trader. I'm leg 1, leg 2, leg 3, leg 10, leg 40, leg 90. You want all the legs. I want the pullbacks to the upside. Boom. I want the drifts to the sideways. Boom. I want this color change. Boom. I want that color change. Boom. I want you to be total, a total trader. But I am telling you that there are some traders who choose a leg because their statistics have shown them that they're bad on one leg or the other. All right. Shin is asking, isn't this entry at new low? I think you mean the entry here. This is like $6 down. Yeah, but remember guys, this is a relatively narrow state, so you can still get flow. You can still get flow. It's different if that's happening here. And now you've got a lot of space, but you're igniting from a narrow state, so you can get flow here. All right. Oh, you mean the second one? No, you can't look at it like that. So Shin is saying, well, Oliver, isn't this grabbing the play too low? You're thinking too much. You've got a powerful leg one. You've got to know that the statistics of follow through are high here, especially after something violent like this. Now, let me just cover this and then I'll let you go. You can do an individual stop on this second play here. So if you enter on this color break right there, because you're breaking the color green, you can place your stop above the event. Why? Place your stop above the reason. Why are you getting this? I'm getting this because of the color break. We'll put your stop above the color, above the whole play, or above the bar that's breaking. All right, boom. All right, your risk is small, but look at what you got if you held on. That's the snowman that you want. Here's my risk. Here's my profits. Fat profits. Fat, long profits. Little tiny loss.